Tonight, we are going to learn about how TIAA is forcing you to finance the climate crisis and a little bit about their climate progress plan. We will hear from speakers Caroline Levine from Cornell University, and then Tom Sanzillo, who is a director of financial analysis for the Institute of Energy and Economics and Financial Analysis. So after we hear from our speakers, we will then have opportunity to take action as a group to make our voice heard to TIAA. So my name is Abigail, and I am an organizer with TIAA Divest. I've been with them for a little over a year now. And before I started as an organizer with Friends of the Earth when I was 19. So I've been organizing for about 7 years now. So a little bit about TIAA Divest. So TIAA Divest was established in 2020 by activists that were opposing the construction of a fracked gas plant in Dover Plains, New York. So their protests against the Cricket Valley fracked gas power plant revealed that TIAA was actually a 35% owner and a significant investor in a lot of companies like Adani Coal. And they also found out that there was involvement in land grabs and deforestation in the US and Brazil. So since then, the movement has gained momentum and has attracted support from university professors, doctors, students, and retirees. And we've partnered with organizations like ActionAid, Stop the Money Pipeline, and the Elaine Legacy Center to try and achieve our commitment of halting TIAA's financing of the climate crisis. So we're here tonight to uncover the truth about TIAA's role in fueling the climate crisis with your money. So despite TIAA's claims of being environmentally conscious, we actually know that their investments tell a different story. So through greenwashing tactics, they mask their significant contributions to environmental degradation while portraying themselves as champions of sustainability. So don't be fooled by their claims of feeding the world or green and progressive investments. Groups like TIAA Divest demand accountability while experts and researchers shine a light on the truth. So a little bit about fossil fuels. The climate crisis is a pressing issue, with 3.6 billion people already living in areas highly vulnerable to its effects. Fossil fuels, including coal, oil, and gas, are identified as the primary contributors to global climate change, and they're responsible for over 75% of greenhouse gas emissions and nearly 90% of carbon dioxide emissions. Greenhouse gas emissions trap the sun heat. This leads to global warming and contributes to the climate crisis. TIAA, with $78 billion invested in fossil fuels, is facing criticism as burning these fuels continues to worsen our experiences with the climate crisis. Climate change demands a systemic response. The extraction, processing, and burning of fossil fuels release vast amounts of greenhouse gases into the atmosphere, leading to rising temperatures, extreme weather events, and ecological disruption. Furthermore, fossil fuel extraction entails destructive practices such as deforestation, habitat destruction, and water contamination, which pose significant threats to biodiversity and human health. By continuing to invest in fossil fuels, we are complicit in the destruction of our planet's ecosystem and jeopardizing the well-being of current and future generations. We must divest from fossil fuels to mitigate the impacts of climate change and safeguard the health of our planet. Pension funds, with their substantial investments, wield considerable influence in shaping environmental outcomes. TIAA continually releases reports about their stellar practices and the results of their investments. Yet I witnessed firsthand the implications of their investments and practices on communities. While in Elaine, Arkansas, I witnessed the burning of crop residue on TIAA fields, which releases chemicals directly into the air, causing damage to local organic farmland and trees. I did not witness any of the claims they make about facilitating community health and connection. In fact, the locals shared their experiences of exploitation and the hardships of residing in a food desert. TIAA claims to be feeding the world, yet the communities they farm in are food deserts, and the food these Black farmers attempt to grow is damaged by their practices on TIAA land. TIAA clients in Arkansas had no idea that their money was funding their illness and their destruction. TIAA operates in secrecy while falsifying a progressive and positive legacy. In my organizing role, I continually encounter activists and clients that understandably believe TIAA is saving the world with their investments. They tell me that they are a green company and that ethically they have seen where their pensions go. They are usually shocked to learn the truth. The true impact of TIAA's investments and practices needs to be exposed. It's really important tonight that if you think of anybody that needs to understand where their pension fund is going, or people who might believe that they're having a positive impact by choosing TIAA as their pension fund provider, please feel free to send them the recording of this of this webinar tonight, or to invite them to learn more about TIAA Divest and TIAA's true practices. So with that, and with learning just a little bit about why we are here tonight, I'm now going to pass it to Caroline.
Welcome to all of you. Thank you so much, Abigail, for getting us started tonight. I'm a faculty member at Cornell, and I'm actually a second generation TIAA client. Both of my parents were TIAA clients. And um, I was really mad to learn how much TIAA is investing in fossil fuels and in land grabbing agribusinesses. I had no idea. I always thought it was a kind of, it's founded for teachers. It was a nonprofit for a long time. I always thought it was a kind of, as I sometimes say, a mom and pop pension fund. Turns out it's a $1.3 trillion business with a tremendously destructive impact on the world. And a lot of us faculty are forced to have TIAA as our pension funds. We can't move our money elsewhere, especially if we have annuities. And even when we have our money in their ESG or so-called social choice funds, those are packed with fossil fuels. So it's been a long and hard journey to learn how much my own money has been going into this terrible greenwashing set of deceptions. When we think about what we can do in the climate crisis, a lot of us think about taking individual actions, like making sure we don't fly too much, or we eat a plant-based diet, or we recycle our plastics. But one reason I got involved in the TIAA Divest campaign is that I have learned, and this is partly through teaching at Cornell, that the fossil fuel companies are actually responsible for trying to get us to focus on our own individual actions. So it was British Petroleum that came up with the very idea of the carbon footprint in the first place. So getting us all to think about our own impacts on the environment and to look away from what they're doing, which is to continue to plan to expand fossil fuel investments. So part of what I'd like us to think about, I hope you'll consider with me, is to think about how joining a group like TIAA Divest and doing collective actions the way that we do is actually more effective than focusing on our own individual contributions to the climate crisis. And so that's one reason that I've been involved in TIAA Divest. We want to think in particular about pension funds because they're a major driver of the climate crisis. So most of you probably know that pension funds aggregate large sums of money to be invested to generate profit. The main goal of a pension fund is to make sure there'll be enough money to cover the pensions of employees after their retirement in the future. And sometimes you'll find both pension funds like TIAA and universities saying that they can't divest because they have a fiduciary duty. And the more we've done research into this, the more that this looks like a smokescreen too. First of all, there's no actual requirement of short-term financial gain under the definition of fiduciary duty. It's just to be in the best interests of the clients, right? That's what a company or an organization needs to do when it claims fiduciary duty, is to be in the best interests of its members. And that, of course, includes the climate crisis, right? There's no who wants to retire on a dead planet, right? It's not in our best interest to have a destroyed planet. But also, as Tom Sanzillo will talk about more with us, fossil fuels are a terrible long-term investment. So with pension funds, that's particularly important because anybody who's, signing up for a pension fund right now at the age of, let's say 30, has to have a pension 30, 35, 40 years from now. And fossil fuels are not going to be a good investment 40 years from now. So when people start throwing the words fiduciary duty at you, I encourage you to be skeptical. So as I mentioned, pension funds are a major driver of the climate crisis. Just 23 investors hold 50% of all institutional investments in fossil fuels, and TIAA is definitely in the top 20. So we're talking about global investors in fossil fuels. There's just 23 companies, and TIAA is somewhere up there. It's we're not exactly sure where, but I would say it's around 10 in that list. So what is TIAA? Many of you probably know, the Teachers Insurance and Annuity Association of America is the largest retirement and financial services provider to those in academic, research, medical, cultural, and government fields. Now, this is important because so many of us who have TIAA as our pension provider are people who know about climate change and care about it and are worried about it. So thinking about the people who are in academia, people like me, who we spend our whole lives trying to set students up for a great future, and we don't want our own retirement money going into destroying that future. It just doesn't make any sense. Similarly with physicians and with nonprofit organizations of all kinds. So TIA serves over 5 million participants at more than 1,500 institutions. And as I mentioned, has $1.3 trillion in assets under management, making it an enormous global actor. So if you think about its constituency, people like me, doctors, researchers, nonprofit workers, all of us being kept in the dark, so we don't know where our money is going. But pretty much all of us, if we, a good proportion of us certainly, when we know where our money is going, get mad. And so we think that TIA is a good target for pressure, for a collective pressure campaign, because so many of its clients are angry as soon as we learn about where our money is going. So here are some of the companies that your and my money is being invested in: Chevron, ConocoPhillips, ExxonMobil, Halliburton. Adani is one that we've learned over the course of the past couple of years is in TIAA's portfolio. Adani is one of the biggest coal producing companies in the world. It's just built one of the largest coal mines in the world on indigenous land in Australia, and is punishing protesters in India, where Adani mostly operates, who have been protesting the contamination of water and air pollution, and they've been really vindictive. So they're a terrible company, top to bottom, and I am incredibly upset that my money is going to them. Now, we know that global CO2 is still growing. And we also know that TIA is still using our retirement money to fund the companies that are expanding fossil fuel production. So this has to stop now. There might be an excuse, I suppose, for continuing to fund the fossil fuels that are already above ground, but any fossil fuel expansion blows through the carbon budget that we can possibly afford to spend. So we are gathering particularly to insist on collective action to stop TIA from continuing to put our money in fossil fuels. Now, people sometimes ask about or feel great about having moved their money into TIA's ESG or social choice funds. And this is one of the big shocks to me. And one of the things where I feel the most angry is that even those funds are filled with fossil fuels. So here's some grades given to specific funds under TIAs. You can look up any fund you like on this wonderful website, fossilfreefunds.org. And they give a lot of TIA social choice funds a D. And they're packed, especially with fracked gas, which TIA seems not to have gotten the memo, is in fact a fossil fuel and a destructive one. TIA is not only engaged in funding the climate crisis through fossil fuels, they've also been engaged in land grabbing, that is, seizing land in an opportunistic or unlawful manner. Some of you may have heard about TIAA, and Harvard are two of the institutions most responsible for the destruction of a region in Brazil called the Cerrado, which is not the rainforest, but it's similarly really important to the world's ecosystem. It's the most biodiverse savanna in the world. And TIA has been buying land from people there who are known land grabbers with sometimes violent records of having pushed often small farmers, many of them Black and indigenous farmers, off their land, then torn up the savanna and cleared the fields for agribusiness like soybeans. So TIAA is currently funding one of the most destructive deforestation projects in the world. We've also found, thanks to Abigail in part, and Mary, who's here in the webinar tonight, that TIAA owns large tracts of land in Phillips County, Arkansas. They also own land in Mississippi and other parts of the US South, which have been taken from small farmers, often Black farmers. Phillips County, Arkansas is one of the poorest counties in the nation. And TIAA owns the farmland around it, and they've been spraying toxic chemicals on it, which have been getting people sick and preventing them from preventing, ordinary people from growing food for their own subsistence. And this is particularly shocking in a place and devastating in a place that does not have ready access to lots of grocery stores and that kind of thing. It's a food desert. So we demand, and we invite you to demand with us, that TIAA immediately cease all new coal, oil, and gas investments, that they divest all of their fossil fuel assets by 2025, and that they stop purchasing land in Brazil, the US, and around the world, and destroying ecosystems to create industrial scale toxic agriculture. Lots of us are gathering on campuses, gathering on the streets, gathering online, making these demands. So our strategy is to inspire TIAA clients to speak out. We engage students, faculty, staff, and organizations in pressuring TIAA. We've been calling out TIAA's greenwashing and hypocrisy in lots of media outlets, in formal complaints, and in op-eds and letters to the editor. And we've been directly pressuring TIAA's leadership, the CEO, board members, and senior executives. I just put up this slide in case it's relevant to any of you in particular. TIAA has two boards, two very powerful boards that make its decisions: the board of governors, which actually owns the company, and the board of trustees. And many of the members of these boards are actually faculty or administrators at our universities. So you might look over this list and see if your university is represented, or maybe you're an alum, or you have contacts at one of these universities. We really want to start making sure that faculty, staff, and students at the universities that have board members are aware that their colleagues are there. In the case of Johns Hopkins university president, are colluding in this vast planetary scale of destruction. One of the things that I've appreciated most about being involved in TIAA, apart from making progress, which we've been doing, is learning so much about how the money works. And it's not so easy for us lay people to figure that out. And TIAA is very good at hiding it. But part of the reason that we're so excited to have Tom Sanzillo with us is that he's one of the people who can figure out where TIAA is actually investing our money, and why that's a terrible thing, not only for the environment, but also for our own pocketbooks. So I'm going to hand it over to Tom.
Thanks, Caroline. And well, thank all of you. My organization is the Institute for Energy, Economics, and Financial Analysis, and we're all over the world. These little dots and everything are in the different places where we've published studies and analyses. We're energy and finance experts. My particular expertise is finance, and I serve the role as a fiduciary for the New York State Common Retirement Fund and the New York City pension funds for about 17 years. And for part of that, I was responsible for the state funds. And they're a little over 200 billion now. And learned a little bit about what a fiduciary does and how they do their work. And it's informed how I'm looking at this. And I'll be, I'm pretty careful with this. Is besides the fiduciary responsibility in the State Comptroller's Office of New York, you're also responsible for auditing and financial work and the like. And so I try to be as careful and base the work on accounting standards that are, protective of the public. My main focus here is finance. It's the morality and the politics. It motivates me as well, but my analytical responsibility here is on the money and on how TIAA is managing that money. If you take a look, and this is just a quick chart, and I could go all day on this topic. The main point to be made here is that fossil fuels, whether they're coal, oil, or gas, have for the last 10 years basically underperformed the market. And that means what this shows you is that the energy sector is oil and gas. That's the yellow line at the bottom, and you can see that's below the Standard & Poor's 500. That's your normal basic stock market. And then there's the Standard & Poor's. It says X energy, in other words, without oil and gas, and that black line is above the S&P 500. And what that tells you is that had they invested for the last 10 years, but it'd be longer if we went back further, that they would have done better. It's marginally better, but it's clearly better. And what that yellow line at the bottom tells you is that if you hold oil and gas stock, it's pulling down your returns. This is not me making it up. This is the Standard & Poor's 500. There are other charts I could put up there, and I'll just do one. Is maybe 20 years ago, this oil and gas industry had about 20% of the stock market. That's what they were that's what they held. That's a big holding. That's like what Google does now, and the bigger companies. Today they are just about 4% the stock market. So over that 20-year period, they've declined. That's less. That means they're not as valuable as they were to our portfolios. So when we talk about the divestment, we talk about it as a way to defend your portfolio against further losses. That's what we're looking at. We understand all the climate issues, and for sure they are front and center. But from a financial point of view, there's no financial rationale for the continued investments in fossil fuels, and yet that goes on, and I'm more than willing to answer questions about it. But we've studied TIAA, and the first analysis we did was published in November of 2022, where we looked at their first climate plan. And that climate plan spelled out where they thought they were going to be going, with some new ideas they had about how to deal with climate change. Well, in 2021 and 2022, when they came out with their plan, they were already 7, 8 years behind where everyone else was, because those plans had already been put out by most major corporations, most pension funds, and the like. And we found that even with their new plan, they were covering about 10% of what they're of the over $1 trillion, and that's about 10%, which is not much. And then what they did there was not particularly ambitious either. And so, we published that, and we tried to identify what the carbon risk was, and we did an okay job, but as Caroline said, they're not very transparent, so it's an issue. We see that they focus on disclosure, which is how much of their holdings now are in fossil fuels, which is a step up for them. They never even looked before this. And so to them, that's progress. And I guess that's progress. And that there is the way they see decarbonization or a fossil-free fund is only going to come about when there's public policy requiring it, government policy. They don't really take much responsibility for moving forward. There are thousands of other funds in the world that are doing that. And then they do point out, and they are correct in this, that the data on climate is pretty weak in the markets, but they are, they're trying, they say, to do better on the disclosure. Now, I'm going to talk to you about standards here, and hopefully you'll still be awake at the end of this. But and so the standards are important because this is how the industry looks at them. And when we're looking at them, you look at things. When you're looking at a climate plan, you're looking at things like, what is the level of ambition of the plan? If they implemented their plan, would it make any difference on implementation? And where are they in terms of their governance strategies? Who is involved in this within the corporation, and what is their background? And in this most recent report that they put out in December, all of you came with a great series of questions, and I added some in, and we wrote a letter to them asking them about this, about the actual study, which was deeply flawed. And I've reviewed, and my organization has reviewed studies all over the world of this nature, dozens, if not hundreds, at this point. And so we're trying to be fair, asking them to clarify what they mean. And of course, we've gotten no answer. So here's some of the conclusions that we've reached. And again, the standards that I'm using are based on things from Moody's and Standard & Poor's and Fitch, who are pretty credible entities. They rate trillions of dollars in debt. And I'm asking 3 questions. Will their plan cut emissions? Is their plan likely to succeed? And is there a commitment at the top of the organization? And Caroline suggested some of the answers, and I just want to point out to you from the finance perspective how we would look at this. So their ambition is it's on the low side and close to being not meaningful. And by that I mean they espouse a net zero by 2050 philosophy, and that means that they can continue to invest in fossil fuels, but as long as it all nets out. So if they invest in a couple of windmills here, that offsets some of their other fossil fuel investments. And that's then that they make a big calculation and they say, oh, we're at zero, so you see, we're fine. When in the meantime, they're still investing in all the things that Caroline talked about. We know that the best way to reduce emissions is to stop burning fossil fuels. It's not that hard to understand. That's electric vehicles, that's power plants and petrochemical facilities and the like. But no, what they see as their fundamental goal is this disclosure notion. And we are going to tell you how much it is we are adding to the climate crisis. And that's our plan. And that's what we've not done that before. That's a step forward for us. And that's not what a credible, ambitious climate plan is about. The second thing is, and this, I wanted to use the same chart that Caroline used for a different purpose. Each of these companies are putting out sustainability plans or climate plans and what have you. And so recently, the comptroller of New York State, which is where I used to work, reviewed ExxonMobil's and found it didn't have any credibility. And they're not exactly hostile to Exxon, and they're trying to do an objective view of it, and they just said it's just not credible for many of the same standards that I'm talking about. And then the question becomes, if they implemented this program as they are, would it succeed? And now Caroline mentioned these funds that folks are offered to put their IRAs in. And they're said to be socially conscious, socially responsible, low carbon, Paris friendly, and the like. And so we looked at 167 of them, and we looked at those letter grades. None of them had an A rating, and 95 of them scored D or F. And most of the B rated funds were real estate funds, and real estate funds are one of the least carbon intensive industries around, and they tend to have an easier go of it than some of the other investments. So it's not exactly a stellar program that they're offering to you, the customers of TIAA. And it's statistically. So if they offered this, now they're offering this plan, would it succeed? The answer is no. It's not gonna succeed. Is there a commitment at the agency? We looked at the appointments to the board of directors and the board of governors and the board of trustees since 2021, which is when the new CEO took over. And there have been 3 of the 5 governors replaced. None of them have climate credentials. 7 of the 13 boards of trustees were replaced, new appointments because of turnover. None have climate credentials. That's not true for even most of the major corporations who we are critical of. They tend to bring people on who have some knowledge about climate change. These folks have zero commitment at the highest levels of the corporation. I'm sorry, of the organization. When we're looking at this, these are basic standards, credibility on their ambition, whether or not their implementation works, and whether there is a commitment. The letters we wrote is an honest to goodness attempt to ask questions about transparency. I found a few things in their new report that may actually suggest they are doing some things that are worthwhile. They are so poor in their transparency, and they lack any discipline or desire, I think, even to that they don't even spell out where they might even be helping a little bit with the climate crisis. So you come to a conclusion that the plan has no credibility, and I would say, after having reviewed this and talking it over with my colleagues, they are among the worst. And since we're doing this all over the world, I would say they're among the worst in the world. And I don't say it lightly. They are a big organization. They're a powerful organization, and yet a very disappointing one when it comes to their climate plan. Thanks.
Up next, we're actually going to have opportunity for us all to take collective action right now to make our voice heard to TIAA. So I'm going to be sharing a link in the chat, and it is going to take you to a website that will help pre-populate an email to TIAA board members, kind of sharing what you learned tonight and making it known that we are seeing what they're doing and we are not okay with that. So I'm actually going to walk us through this action together. Once you click the link that I just sent in the chat, you're going to be brought to the TIAA Divest website, which is an awesome website. Please take a moment to look at it later on if you haven't. And you will see that there's this big, large orange button that says send your email. If you click this button, it will open up an email for you that is pre-populated with email addresses and with content. It is a pre-populated email, as you can see. I encourage you to change the subject right here, so that we have a better chance of them reading it. So for mine, I'm just going to say, don't be fossil fools, because I like that. I think it's catchy and it's funny. And then you're going to come down here where there's already a draft email written for you. If there's anything that you want to add from what you heard tonight, for example, maybe you were outraged by a very specific thing, or maybe you learned a new statistic that you hadn't heard about before, like the 78 billion in fossil fuels, or about how financially it doesn't make sense to invest in fossil fuels, please feel free to change this content and make it as customized as possible. Tell them why you are upset. Tell them why you don't want them to destroy our future, and why you're upset that they're funding the climate crisis. Once you get it all customized and filled out, you're going to sign it with your name, which I spelt my name wrong because I'm so excited. And then you're going to simply send it. And what we're going to do is we're going to repurpose something that used to be used for a lot of Ponzi schemes, which is those chain letters. And we're going to use it for something good, which is saving our future. So you're going to then go into the email that you just sent and forward it. So I will reshare my screen. If you can see, I just simply brought this up to forward it. And then you're going to put in 3 friends that you think will take action today, just like this. And once you put those friends in, you're going to then go back to that website that we created for you. And there's actually a pre-written email that you can use to send to your friends to get them to take action. So I will show you what that looks like. If you can see, you come to this page, you scroll all the way to the bottom, and you'll see you're the first link in the chain, which is us doing a chain letter action. So you'll then highlight this and copy it and go and send it to the 3 friends that you believe will take action. So it'll put it in just like this. You can customize it like this to say, dear friends, or you can send it to each person. And it has information for them. There's links for them to click on if they need to. And then there's also the email at the bottom for them to send. I encourage you to forward your email directly because it shows that you yourself took action and reached out to TIAA decision makers. So once you have everything filled out, you just click the send and you have become a part of a large collective action. Now I'm seeing quite a few people are sending emails. I'm seeing that there's some discussion on what we can do with the subject line. People are talking about moving money out of TIAA, or maybe we can have, I see that my friend sent one that said, I'm so upset that you're poisoning my future. So these are all great subject line. I'm now going to open up the questions. And the first question that we're going to have is from William. And it is, why does TIAA invest in oil if it does worse than the index? Tom, do you want to answer this?
Yeah, the investment analysts have a theory of what's called diversification. And their argument is that if they invest in everything, like big funds like TIAA, then they are hedging against the losses when things go down, and they capture the benefit of the market when things go up. And if you invest in everything, you come out ahead, is kind of the way. And if you withdraw from something like oil and gas, that you will harm your returns. Well, the facts show otherwise. And the reason the facts show otherwise, and I'll just be very brief on this, is that it assumes that the markets work perfectly and that what goes up comes down, it's kind of a rule. But when it comes to oil and gas, what's happened over the last 20 or so years is that what has gone down keeps going down lower, and what goes up doesn't go up very much. And so, as a matter of a whole, the diversification theory doesn't work for oil and gas. And they're very smart people, so they should recognize this, right? Well, they're not. And I would argue that in large measure, they're not doing it mostly because there's a lot of lobbying going on right now by the fossil fuel industry at pension funds as well as at governments. And that large notion allows them to say, oh, it'll turn it around, it'll turn around. And occasionally Vladimir Putin invades Ukraine, the stock for oil and gas goes up. They do make money. They make money because the war has created, disruption in the oil and gas markets, which drove the prices up. It's not the correct way to invest money. You invest money based on supply and demand, and not on whether or not there's a war going on. And yet that is what you'll hear from the stock analysts. Oh, the oil and gas just went up. Well, it went up because of the invasion in Ukraine, and now the fear of more war in the Middle East. those are not investable. Those are not, investable thesis, but they're continuing to invest in it. But even so, with that, it's going down and going down slowly, is what it is, and we need to go down faster. And there needs to be a policy statement about it, not just the market. They are losing market share. That's what, when I said to you, it was at 20% of the stock market, it's now at under 4% of the stock market. That's a substantial drop over a period of time. So the markets are moving out, but they're moving out too slowly, and they're moving out as a function of the markets, not as a function of the kind of policies we need to see created.
Thank you for answering that question. The next question we have is from Mary, which is, Caroline, do you suggest we try to get universities like Cornell and Harvard to pull out of TIAA as an institution? I see Harvard students blame the Harvard top administration because they invest in TIAA rather than blaming TIAA.
Shall I go ahead and respond, Abigail?
Yes, please.
I I responded to Mary online, and I do think that this is partly a strategy question that we've thought about quite a lot, which is as a group, which is should we target the institutions that our investments are under? Like for me, that would be Cornell, or if you're Harvard faculty, that would be Harvard. And try to get your own institution to get out of TIAA or to pressure TIAA, or should we just pressure TIAA directly? And one of the things we've realized is that the administrations at our institutions don't want to, they're like an extra layer of obstacle between us and TIAA. They don't really want to talk or think about this at all. And so rather than getting stuck in the kind of mess of thinking about, for example, the Cornell, who exactly, which office is choosing TIAA over other options, we decided to pressure TIAA directly. And we think that this has had quite an effect. I mean, they do, for example, when we filed a complaint which had 800 signatories from faculty members across the US, TIAA didn't change much of their investments, but they did take the greenwashing claims off the website. And as Tom says, they have been changing some things. They're just not very good with transparency. So we think that this strategy is working. And we think that if we put too much energy into trying to get Cornell to say that they don't want to invest in TIAA, we'll actually just be slowing the campaign down.
Thank you, Caroline. Up next, we have another question from Molly, which is, well, it's more of a statement, which is, my college will want an alternative if we faculty demand that they move out of TIAA. Caroline, do you want to kind of speak to the idea of pressuring TIAA versus moving out of TIAA?
Yeah, a lot of people have asked that question, and it's a great question. And that is, should I get my money out as soon as I can? And and what are the alternatives? Are the kind of two questions that come up. Our strategy has been because there aren't great alternatives for big pension funds that can handle large university accounts that are also green. So there are plenty of pension funds, plenty of bank accounts and that you can find that are green, but not on the scale of Fidelity, TIAA, Vanguard, these kind of huge companies. And so rather than say to our universities, here's an alternative, because we don't really have one, we've been saying, no, let's stay in and fight. That is, let's say I'm a TIAA client and I join with these other TIAA clients in saying that we want our money out of fossil fuels. Now, it is possible that at some point we should say, and we're going to move our money by this date if you don't. But we need quite a lot of people for that to make any kind of impact. So as usual with individual actions, they sometimes they don't make a dent because they're too small and too quiet to make that kind of impact. So we're encouraging people to stay in and fight. I'm still a TIAA client. I actually can't move my money, but I also am really eager to push TIAA to recognize that its huge client base is upset. So that's been how we've been thinking through it.
If I could add on to that, the fact is that TIAA is large, and it being large can be an advantage for all of us. And what we're seeing increasingly is that there are more and more and more products coming onto the market that entities like TIAA can get involved in. They're institutionally based funds. And those institutional funds are increasingly lower emission funds, and they are and they have better than they have very good returns, like I'm showing here. And so you'll have a fund like in California. They recently did an evaluation, and in one move, they moved $20 billion from what was essentially a fund that included fossil fuels to one where they were just about eliminated completely. And a big fund like TIAA can make those kind of much larger movements, and that's why institutionally they're very important. On the other hand, and I agree with Caroline about what you can do individually, but the truth of the matter is every voice that's raised on this, and in every way this is done, whether it's individually or in big it makes a difference. They are listening, and we're always told, well, it doesn't matter if I put solar panels on my house, it's not going to change anything. You know what? The utility knows you're putting solar panels on your house, and they don't like it when you do they do that, and they begin to change. It's the same thing here. Customers who take out their money, it's better to have the bigger institutions do it. But you can do what you can do, and that's important. But the larger institutions, like if TIAA moved even a little bit in our direction, it would be huge. That's why I was a little frustrated when I saw in their report. I said, I think they're actually making progress on these bond deals, and TIAA is a very big player in the bond market. It's much more important than some of their other investments. And I said, why don't they just like say what this is, because it looks like progress, and they didn't. They obfuscated it. I said, maybe they don't. I don't know why they didn't do that, but they may have actually made some progress.
Great, thank you. And then our next question is, where should TIAA invest?
Oh, well, we did an analysis and back in November of 2022. And you break up the portfolio just as they have it broken up. I won't get into a lot here, but there's stocks, there's bonds, there's more speculative kinds of private equity investments, they're called. And in each of those asset classes, they're called, in each of the asset classes, there are now mirrors, mirror funds. So if let's say you have Standard & Poor's 500 stocks, there's a mirror fund. It's called Standard & Poor's 500, excluding fossil fuels. Those mirror funds exist in almost every part of the economy now, because customers are demanding it, because the movement is bigger and better. And if they can just, it's not that hard to do for them to do. It used to be very difficult, and but now they have very TIAA has among the most both and Levine, large number of staff and highly professional staff. They could do this with a limited amount of administrative problem, and with, I would say, no financial risk, to be able to move into the right funds. And they do it gradually. And so our report specifies, again, conceptually what would be done. Unless you know how the fund is actually run, it's very hard to give precise things that can be done. But conceptually, I'm sure the advice we gave in that report is correct, and many funds are doing the same thing. That's where we got it from. We didn't make it up. There are hundreds of other funds who are doing the same thing. So there's a clear path.
Thank you. And then our next question is, the other funds on my plan are from Vanguard. How do they compare to TIAA?
They have many of the same problems. But what I would say to you is, if you're invested in Vanguard and you're invested in funds that have fossil fuels, you probably want to just look to see if there are those mirror funds. Do they have whatever it is you're invested in, and then examine it and see if it looks like. And you could read our report. It tells you a little bit about it. But if you want to, we don't give individual investment advice. That would be wrong for us to do that. We're not licensed to do that. But the basic concept is there are more and more and more low emissions funds that are being offered by Vanguard and all. But as we point out here, you need to even look at even those, because they can be misleading. They're there, but you have to dig it out. It's unfortunate, and our bigger vision is that the funds like Vanguard and MSCI and Standard & Poor's, they should lead with these fossil-free funds. In other words, if you walk into their office and say, I want to invest, they're going to tell you about the Standard & Poor's 500 and this fund and then that fund, but they're not. And then you have to ask them for the fossil fuel funds, the excluding fossil fuel funds. They should be offering the excluding fossil fuel funds as the lead at this point, because they are lucrative and they should have a climate consciousness, and which they don't. And so you have to push and push and ask when they should be just leading with it, and that would up the market share considerably. But they don't do it, and they don't do it because not enough pressure on them. And it isn't so much that we aren't producing pressure. We are. The other side's producing more.
Thank you. And I just want to say that in the chat, we also shared the link to Vanguard SOS and then a couple of other teams that are tackling Vanguard's work specifically. So up next, the question is, so this is like shareholder engagement, which others think isn't working. Caroline, do you want to expand a little more on what you were saying in the chat?
Yeah, this is a great question, and one that we've spent a lot of time talking about, and I think we're always open. I keep speaking as a member of our group and the strategies that we've thought about. We definitely keep thinking about them, and so we're open to being persuaded otherwise. But the idea of staying in and fighting looks a lot like shareholder engagement, where companies say we're not gonna invest from fossil fuels. We're gonna pressure Exxon as one of its shareholders. And it's true that that kind of shareholder engagement is not to be working very well. So a couple of things. One is that TIAA does not actually have shareholders. We're called participants, not shareholders, and they don't have a shareholder meeting, and there's no way to bring forward any kind of shareholder resolution with TIAA. So we actually have fewer formal routes to any kind of say over the company than we have if we were shareholders. So that's like a frustration and a problem that we've been trying to solve. One of the things we do know is that TIAA pours a tremendous amount of time and energy into trying to persuade us that they are green and sustainable. So pushing back against that by making sure that their participants know that they're not green and sustainable does seem to rattle them substantially. So we think that it is working in that sense. I guess the other thing I just wanted to say about shareholder resolutions is one of the things I learned personally when we were putting together our formal complaint. I had no idea that you could look up any company's votes on shareholder resolutions. Those are a matter of public record. So we looked up TIAA and saw, so they say they're good at shareholder engagement. And we looked at their votes on shareholder resolutions, and, about a third of the environmentally uh, friendly resolutions they voted yes on, and about 2/3 they voted no on. So also when companies say that they're doing shareholder engagement, it's not clear to me that that's what they're doing. They apparently we can find this out, but whether it's working or not is, now more of a puzzle to me than it was before, because I see that TIA claims to be doing it and yet doesn't seem to be actually following through. We do think, from lots of, mostly reading about other campaigns and trying to do research into what activism works, that large collective pressure campaigns that are sustained over time do work. And they usually have multiple prongs. So letter writing, as we're doing right now, direct actions where we're showing up in front of TIA's offices, marches and rallies, resolutions passed by universities and unions. Trying to think of it, we did an op-ed and letter to the editor campaign just this spring, making sure that TIA knows that they're in the press, that the real information about them is getting out into the press. So a multi-pronged approach is what we think is really effective. And we're always open to being persuaded to try new tactics if you have recommendations for us.
And that answer actually leads us into our next question, which is how do we take action now? I'm going to quickly share an answer and then pass it on to whoever wants to tag on. But first, I want to encourage you to take action by sending out those emails and getting 5 of your friends to also send out that email, because they can also, continue the chain link and get other people to understand what TIA is doing. The next thing is that you can actually register on our website, which I just sent the link in the chat, to stay involved with our campaign. And then Iris just shared some social media links that you can follow. I think that one of the best things that you can do to take action is to spread awareness. So posting on your social media, emailing some of your friends, really making people in your department understand what TIA is doing. Caroline, is there anything that you would like to add to that?
Every month we send out a newsletter. I presume that that's how a lot of you found out about the webinar today. And we always have an action that we ask you to take. And it doesn't take a lot of time. We don't imagine that you necessarily have a lot of time on your hands, but if you do that one action every month, we'd be super grateful. It definitely adds to the chorus of voices. So just to know that, just to look through the email, make sure that you're through the newsletter, make sure that you're noticing the action.
That's a great one. And then our final question is, do you recommend that we advocate for a faculty resolution at our institutions demanding that our administrations put pressure on TIA specifying our demands? I just want to say I am sharing our previous faculty resolutions in the chat. And then Caroline, do you want to answer that a little bit?
Yeah, sure. So we have had 17 different institutions pass resolutions, and we think that that's really important. TIA always says that it's responsive to its clients and that it hasn't been getting complaints. And so having these formal resolutions passed where we can say, well, look, this is a substantial body of people, a whole institution is objecting, is a powerful thing for us to be able to say. And we really encourage faculty and staff resolutions. I am very happy to talk to you about how to do that on your particular campus. Every campus has its own patterns and structures, and we've worked with a lot of different campuses. We also have model resolutions that you might want to pass. The other thing that we've started to do is to think about and to target unions and professional associations for resolutions. So we have a resolution going through the AAUP right now. If you're an AAUP member, keep an eye out for that. I have a resolution through my organization, which is the Modern Languages Association. And we have a number of unions, including the SUNY faculty union passed a resolution, and so did the American Federation of Teachers, putting pressure on TIAA and other pension funds to get out of fossil fuels. So those are a great way to register collective objections to TIAA's practices. And please feel free to email me if you'd like to have a one-on-one chat about resolutions. It's something I'd love to talk to you about. I'll put my email in the chat.
Great. Well, thank you so much for such a lively participation and for really taking time to come up with some thoughtful questions. I just want to flag that one exciting thing that TIAA Divest is working on right now is TIAA is actually sponsoring something called the IOME Challenge, which is a challenge to get young individuals interested in retirement and securing their future. We all know that there will be no retirement on a dead planet. So we are encouraging people to look at this new challenge and really think of it in the terms of climate. And TIAA Divest will have an opportunity to have our own challenge to run in conjunction with this, where there will actually be a prize for the individual or team that comes up with the best response to the IOME challenge. So there will be more information about that in our newsletter. So I really encourage you to register to stay involved on our website, which I will send you the link to that right now so that you can get the newsletter just in case you haven't. And I encourage you to make sure that you are encouraging your friends to register it for it too, because it's the best way to keep up with what's happening with TIAA Divest, to learn about more information, and to figure out how you can continue to take action. So I want to give a special thank you to our speakers tonight for sharing their wisdom and taking time to help us understand a little bit about what TIAA is doing behind closed doors.